Hello traders, welcome to our new lesson of our base trading strategy course. In today's lesson, we discuss the critical aspects of determining your starting capital. Then, we'll showcase how to begin laddering with position sizing in mind. In our last lesson, we talked about making trading goals and objectives. Today, we'll use those ideas in the market. Let's get started. Introduction to starting capital. Before diving into the markets, it's essential to determine how much capital you'll allocate to your trading account. Your starting capital sets the foundation for your trading journey and influences your risk management approach and position sizing strategies. Assessing risk tolerance. First, determine your comfort level with risk to decide how much to start trading with. To do that, consider the percentage of your money you're okay with using for trading. We suggest starting with at least $500 in your account for base trading. With this amount, you can manage risk well without needing stop-loss orders and use laddered orders. This means splitting your money into parts and putting them at different price levels on the chart. Think of a ratio of funds to use in your first ladder. Consider using about 50% of the capital you choose to start with for laddered orders. For example, if you have $500 and use half of it, you still have the other $250 half of your account to work with. This way, you have a backup plan if things don't go as expected. It's all about managing risk wisely and giving yourself room to adapt as you trade. If you have a larger account, we still recommend taking it slowly and investing a minimum amount until you become comfortable with the base trading strategy. This allows you to learn about risk without losing too much if you lose the entire laddered order in the market. Remember, you must work out how much you're willing to risk before trading. Establishing risk management rules. Once you've figured out how much capital you're comfortable risking, the next step is to use that capital in laddered orders. Earlier, when we talked about using a ratio of your funds, you want to split the funds into a ratio so that you still have some funds left in case of a bad trade. To establish effective risk management rules, consider setting exponential order sizing. For example, you might decide to follow the previous concept and use half of your total trading capital in the laddered order. Remember, the key to successful trading is not just about making profits, but also about preserving capital. By establishing clear risk management rules and adhering to them consistently, you can protect your investment and increase your chances of long-term success in the markets. Possible outcomes. Using up all your money for trading is okay, but sometimes you might need to add more money if a trade goes bad. If you can't do that and the trade starts losing money, you might have to accept the loss. Case study examples and application. Let's use a real example to show why it's important to figure out how much money to start with and how much to trade. We'll see how making smart decisions about these parts of trading affects how well you do overall. First, we need to find a market that has given us a valid base and a panic. We will cover more about this later in our practical lesson. For our example, we will use the MEXC NISA USDT market. But first, we will set up our base info algorithm so that we are looking at the correct bases in our chart. So head over to the algorithm box in the base info widget and click on the arrow to make the menu drop down. Then change the current algorithm from what it is now to Position Trader, as this is the algorithm we need to be doing our chart analysis on. Now we need to set up a laddered order. To do this in AllTradey, you will need to navigate to your trading widget, which is located at the top right of the terminal. Click on the ladder tab and then the dropper icon next to Start Price to set the price to begin the laddered order. In this case, the market is already trying to respect this base, so we will put the start of the ladder at the price the green candle printed this bounce. Once you have that, click on the chart near the price you want and then our laddered orders will be placed. Now, let's add a $250 position size. When we do this in AllTradey, it automatically splits the order in half. So, we end up with two orders, each worth $125. Next, we want to increase the number of orders to 4. To do this, we'll use the swatches next to where it says Orders Hash. After that, we'll set the size scale to exponential. This means the orders will be divided into parts to gradually buy more during a market panic, making it safer. Next, turn on your take profit orders and set them to scales. Here you can see the median 1x line. Then place 2 take profit orders. The first one needs to be either under or on the median 1x line. If you want a second one, you can place it on the half median or closer to the base. Finally, we can press place order and see if the trade plays out. As we finish up, keep in mind that deciding how much money to start with and how much to trade is significant in trading. By thinking about how much risk you're okay with, deciding how much you're willing to risk in your trades, making rules to manage that risk, and using smart strategies for how much to trade, you can handle risk well and make the most of your trading profits. Thank you for joining me in this lesson. In our next lesson, we'll explore establishing entry and exit strategies in base trading. Be sure to like the video, subscribe to the channel, and tick the notification bell for future updates to AllTradey. And until next time, happy trading.